Once again, ladies and gentlemen, boys and girls, and children of all ages, you are now tuned into the Investor Show. As always, this is your gracious host, the Prince of Investing, Prince Dykes, coming to you guys and girls live all the way from the beautiful city and state of Denver, Colorado. So if you're catching this live, feel free to drop a comment and tell us where you're catching it live from. If you're catching playback, feel free to drop a comment as well. But anyway, ladies and gentlemen, we got a very interesting episode for you today. Very interesting company came across my desk by the name of PadSplit. Company's been around for 3.5 years, started in 2017, raised $14 million in capital, and is taking houses and pretty much developing houses and turn them into affordable houses for people around the globe. So anyway, without further ado, I got to ask the questions, ladies and gentlemen. I got to bring on the CEO of PadSplit, Mr. Atticus LeBlanc. Hopefully I said that right. But anyway, without further ado, let's bring on our guest. How is it going, Mr. Atticus? You doing all right?
I'm doing great, Prince. I really appreciate the opportunity and happy to be here.
Definitely. Ladies and gentlemen, if you are catching this live, feel free to tell us where you're catching this from. I'm pretty sure, Atticus, you're down in Atlanta, right? Down in Georgia?
I am,
okay.
Yep.
That's my stomping ground. That's my hometown right outside of Augusta, small town out of Augusta.
Been here almost 20 years, so.
20 years. Nice. A lot has changed in Atlanta in the last 20 years, I see.
That's a fair statement.
Oh, yeah. But the first thing I want to get into, we want to stay on topic here, is for the people out there, what is PadSplit?
Sure. So there are probably two ways to break this down. One, the easy way is we move strangers in together to make housing both more affordable for residents and more profitable for owners. The official vision is that we're creating a world-class marketplace that provides the fastest, most effective solutions for the affordable housing shortage for low-income earners.
Okay, well, that was quicker than I had expected. That was quick. That's a good, good media trained pitch there, Atticus. Good stuff there. But the thing I got to ask you now is, can you explain to me? I own a home. I want you to explain from both sides. I own a home, and someone who's looking to maybe rent a room. Maybe I'm a college student. Maybe I just graduated college. How does this work on both ends?
Yeah. So I'll start with the owner side. Most of the folks that we work with on the owner side are investors. And if you're an investor, you're generally looking for higher yield. You're looking to increase your bottom line. My thesis when I first started confronting this problem, and I've been an entrepreneur now for 16 years and in the affordable housing space for almost 14, was that if you could align the interests of the people who needed more affordable housing with those of housing providers who are ultimately looking for better returns, then that's ultimately the way you would solve this problem. And so effectively making affordable housing possible by also making it more profitable. And the way that we do that is we create the tools and services that an owner would need, that they either, things that they can't do themselves or wouldn't want to do themselves. And we provide those services through a technology platform that enable them to subdivide their house into individual rooms. So if you think about the traditional pricing paradigm for rental real estate, the first bedroom is always your most valuable bedroom. And there are diminishing returns from there, where a 6-bedroom house is not worth 6 one-bedrooms. A 2-bedroom house is really not even worth 2 one-bedrooms. But in our model, because we separate the different contracts and create different billing setups for each occupant that's renting a room, that value of that 8th bedroom is worth just as much as the 1st bedroom. So you hit this tipping point that's actually worth a lot more money. And then what we do for them is all the lead generation, demand gen, move-ins, marketing, branding. We set the brand standards. We handle all of the payments processing and collections for each of the payments that are made through the platform from all these people that are sharing the home. We set up the accountability mechanism. So residents on the platform can rate and review each other, give each other call outs or shout outs, depending on if Prince stole my cheese that day. Those are calls that no landlord ever wants to get. And so we address a lot of that. And then we're also tracking to make sure that those landlords are responding to maintenance tickets in a timely manner. And so really building trust on both sides of the platform. You had asked about the resident side, who we refer to as members. Mm-hmm. It's pretty simple. In Atlanta, for instance, the average rent of a 1-bedroom apartment here is $1,500. Well, just to qualify for that unit, you're going to have to make $55,000 a year. And how many people in Atlanta make less than $55,000 a year? The answer is a hell of a lot. And so for those folks, we give them an all-inclusive room that includes furniture, utilities, Wi-Fi, laundry. We even include credit reporting services and access to telemedicine for about 42 to 65% of the cost of that one-bedroom apartment. So it's a lot cheaper and it's easier to access, where they don't have a long-term commitment or a really high deposit up front or anything like that.
Okay. Now, I'll put on here, you kind of hit on this already, where how PadSplit, like as an investor, the people that are tuning in live right now, the first thing I gotta ask as an investor, when you look at this, you're saying I can make you 100% yield for property owners, right? So you're saying, hey, like for prime example, I have a 5-bedroom house. I have a 5-bedroom house, and you're able to do this because you rent every room at the same rate. Am I correct?
Yeah, well, they're not exactly at the same rate, but each one is an equivalent value. So you think about what's happened in this country is over the last 60 years, the size of single-family homes has tripled. Meanwhile, we know that households and family size are getting smaller and smaller. And so what happens is you have a lot of wasted space that's sitting in mostly single family, but it happens in multifamily as well, that just isn't being used and can't be monetized. So you think about, if you have a formal dining room in a rental property, what's the incremental rent that you're getting from that formal dining room? The answer almost assuredly is zero. Like it's absolutely worthless. But there's no reason that formal dining room can't be converted to a bedroom. You change out the furniture, and voila, it is now a bedroom that has the capability of being rented. The major issue is there's no consolidated source of lead generation to fill that room. And then if you were going to fill it with someone who doesn't know the other people in the home, how do you actually manage all those contracts and the payments and all of that kind of stuff? And so that's really what we do, and why there's so much more value, because your formal dining room, your home office, if you have a living room and a den and a family room, all these extra spaces can be reasonably easily converted into individual bedrooms. And there is an enormous population of folks. It's really, single person households are the greatest share of households in the United States, certainly of renters, that just don't have access to any good housing options. And so you can market to those folks with these types of shared rental facilities.
Okay. It's a pretty good idea. Now, you have over 1,700 units that you've gotten to in the last 3.5 years. Amazing, by the way. Definitely a round of applause for that. But I got to ask you this question, right? What do you think about places like, hotels? People are not using hotels. Airbnb is becoming popular. Have you seen a lot of hotels for sale that you could potentially put on PadSplit's platform?
Yeah, we've looked at it, and I mean, listen, I think we are essentially like a management platform. So if you think of property management as the on-site maintenance side, which we don't really do a lot of, or the resident management side, we can do that in a lot of different formats, whether that is a single family home or we have a number of apartments, hotels, accessory dwelling units. There are any number of different housing types that we can be really effective at providing affordable housing with low barriers to entry in all of these groups. We've experimented a little bit with hotels and had some folks come on the platform. Frankly, it hasn't been a huge growth or attributed a huge portion of our growth, which has largely been both single family and traditional multifamily. But I do think that it's got some potential in the future.
Let me ask you this question. What do you think about the concept of maybe a PadSplit like purchased a hotel, then just PadSplitted the whole entire, place?
Yeah, we've had a couple opportunities that have been brought to us in, with that type of idea. The reality is that generally hotels or the people that are looking to do that kind of thing are more in the traditional multifamily mindset. And where we add the most value today is number one, on lead generation. And if it looks and feels exactly like a studio apartment, then they're looking at those traditional marketing channels to fill those rooms. And they're still charging the same deposits, and everything is still pretty traditional. Whereas for us, if it's a shared situation, no one else really does what we do. And the price point that we can hit in these shared settings is significantly lower than anything else, inclusive of hotels. Where, I mean, right now, if you looked at the average price of a pad split, all inclusive, compared to an extended stay motel that's really in rough shape, it's still about half. So it tends to be just much more affordable for our clientele to take advantage of those unmonetized, wasted spaces in traditional single family and multifamily. And it also creates a much better opportunity for investors to get that upside. If you're looking at a hotel residential conversion, pretty much anybody can look at an existing extended stay motel that has a kitchen, has a refrigerator, and everything set up, and say, oh, well, yeah, that converts really easily. And there's a lot more competition from the investment side for those types of assets, because they say, oh, well, hotels to residential, that's an easy conversion. Whereas there are very few people who are looking at single family homes and saying, oh, wait a second, I can take advantage of that formal dining room that no one else is looking at as an asset that can be monetized.
Okay. Now, right now the housing market's been doing extremely well for single family homes and multifamily homes. I really can't speak about commercial, but it's definitely for the residential.
Sure.
We've been doing very well here in the market. Now, do you feel the housing market is at a peak? How do you feel about the housing market?
Yeah, it's hard to say. I think I've been asking myself this question for a long, long time. I started buying houses in 2008. So
Nice.
and have owned and managed 550 affordable units. So
Nice.
I felt like we were there in the first inning, and it's really hard to gauge right now what inning we're in. Candidly, in 2016 or so, I thought, man, this has been going on too long. Something's got to give. And then it just kept going up and up and up. And then you look at the fundamentals, and the reality is, especially in the affordable sector, we have a real shortage today, as in do not exist, 7.5 million homes for low-income Americans. Like, just don't exist. And then you look at what our rate of housing production has been, and we're just getting back to the early 2000s years of production. And it completely fell off a cliff in 2009, 2010. So we've just got a really long way to go before you get any sort of equalization in that supply-demand imbalance. And it's hard to know, when that could possibly change anytime soon, because it's clear there's no way that we can build our way out of the housing shortage based on how deep we're in a hole right now. Competing with that is, of course, what's going to happen with interest rates. And I think that's really the potential shoe to drop, is if we see interest rates spike, then that can create a serious correction. But then again, you've got tons of cash sitting on the sidelines with all these private equity firms and lots of individual high net worth investors that are just waiting to pounce if interest rates really start to spike, and they can just buy with cash. So it's really hard to tell exactly what's going to happen. I think we're really seeing a revolution in housing in the same way that we saw the industrial revolution around the turn of the century. And we're going to look back in 20 years, 30 years, and just realize that this was quite a remarkable period from the housing industry overall. But hard to say what's exactly going to happen, because those fundamentals look great, and I think everybody's concerned about interest rates.
Okay. Well, interest rates are very low right now. We're starting to see inflation starting to spike, so everybody's getting ready for the interest rates. But I got to ask you this question right now. What would you be doing as a real estate investor? Buying, holding, or selling?
Yeah. It depends. It depends what part of the market we're in. I mean, I was flat broke in 2007, and the reason I ended up in the deeply affordable housing space was largely because I couldn't afford to be in any other space, and I wanted to create some financial security for my family, and that worked out really well. And what I said to myself at the time was, if I can create a business out of affordable housing that is profitable and sustainable, you're going to be operating in any market cycle at any time. As long as you can be the most affordable option on the block, in a down cycle, there's going to be wage compression, and there's going to be lots of people looking for the cheapest options. And that's still where I'm investing today, and why I feel so strongly about PadSplit and our future prospects for growth. Because I really think that it's just going to be there for the longest period of time. That gap of 7.5 million homes, that doesn't exist when you get to the average national income or above. Like there is no gap in the higher income areas. It only exists for really low income workforce type populations. And so that's ultimately where I've placed all my bets.
Okay, I definitely think that I think you'll do even better in a bust economy than you will in a boom economy.
Yeah.
That's what I was thinking. I look at your business model. I was like, you know what, it's probably be even better.
Well, listen,
But
I mean, that proved out over COVID. I mean, we saw.
yeah,
I don't put ourselves in this co-living category largely because that term has become so loaded and just come to mean young professionals recently graduated from college living in high-cost cities that have to share, and there's social hours and everything else. And I mean, shared housing has been around since the time Homo sapiens were living in caves. So, I like to think of us much more broadly in terms of the shared housing category. But you're absolutely right. I mean, it's going to be great in either type of market. And as we look at what's happened in 2020, people thought, oh man, COVID's going to kill these companies, and it killed a lot of co-living companies that were focused on that higher income, younger demographic. For us, our median income is $22,000 a year. Our average age is 39.
Wow.
And so we grew 179% in over 2020. And we saw for our investors, for our property owners, they saw 129% increase over traditional rentals over 2020. So with everything that happened in COVID times, they still saw significant increases in profitability compared to what they would have earned traditionally.
All right. I'm going to go here to the comments. Hey, what's going on, Al? And Tonio there on YouTube, on Facebook. How you doing, Lucky's mom? On Twitch. Good afternoon, Prince. Val says she's from Houston. How you doing out there in Houston?
We're in Houston.
Oh, see, there you go, right there in Houston. Courtney Rogers, what's going on? Prince, what's going on? But we do have one question that I want to get from the audience. It says, hello. It says, how do all members keep their rooms clean? So are comfortable. So they are comfortable. I mean, what they meant to say there.
Yeah, it's a great question. So the answer is we have a lot of measures here, and I think anytime you have strangers living together, there's a balance. Ultimately, the way that we think about it is on two levels. One, how do we make sure that everyone who comes into the home is comfortable? Whether it's because of cleanliness or somebody plays music too loud or stays out too late or any of the above. And so the ways that we address those types of issues are a couple-fold. One, we offer that rating system where residents can give call-outs and shout-outs if they feel like someone left a mess in the kitchen or someone's stealing my cheese pizza out of the fridge or what have you. The second thing is we offer a hell of a lot of choices. And the reason we're a marketplace is we can say, look, hey, Prince, I'm really sorry that you didn't like your place. But number one, you don't have any deposit. You don't have any real long-term commitment. And we have all these other options with lots of different people. And they're listing their profiles for each home. So somebody's going to say, hey, I'm a neat freak, or I'm kind of a slob, and I'm an introvert, or I really love people. And you're going to be able to pick your home based on who's there and whether you want to be with other messy people or you want to be with other clean people. But ultimately, we want to make sure that you're empowered, number one, to have those choices, and number two, to make those choices wherever you see fit so that you can be in a housing situation that is best suited to whatever your needs and desires are. In terms of like, do they make their bed or not? It doesn't really matter. I mean, who's ultimately going into somebody else's bedroom? Hopefully nobody else from inside the home. There's a big question around how clean is the kitchen? How clean are they keeping the common areas? And across the board, what I've seen comparing this model to a traditional housing setup, it's a lot cleaner when you have strangers that are living together with how clean they keep those common areas relative to how clean they would keep the house if they actually had control over the whole house. And so from an investor's perspective, that's really the key difference. Because the cost for me, if someone moves to go turn a room where somebody maybe didn't make their bed or they made a mess in the room, it's pretty negligible. It's about $100. Whereas if I have to go re-renovate the kitchen or repaint the dining room, those are pretty significant expenses, and that's really where it starts to add up. But yeah, I mean, at the end of the day, we still try to empower all of those different members to make the right decisions for themselves and their own predilections.
Okay. Well, I got to answer this question. I think you're doing something great there with residents who need affordable housing and for an investor, right? I got to ask yourself this question. Will PadSplit IPO? Is it going to go public? PadSplit has raised $14 million. It's 3 years. It got 1,700 units. And we spoke about, hey, if you're doing this well in a boom economy, just imagine what you'll be doing in a bust economy. I think your business is definitely set to do even better, especially as divorce rates go up. More people probably need PadSplit. But is that something in the horizon? I know you got that exit strategy in your head back then. I want to know.
Yeah, it's not so much an exit strategy, but we're a marketplace not unlike Airbnb. And so for any marketplace, an IPO is kind of the natural exit. And it's certainly on our radar. I think realistically, you're looking at probably 5 years out or so from where we are today. Based on our rate of growth, we have over 1,800 now. By the way, Prince. So,
excuse me. I'm sorry. I was sorry. Not 1,700, 1,800.
Yeah, we're growing quickly, and we have probably 4,200 or so between units that are actually under development by other investors that are expanding to new cities. So there's a lot in the pipeline, and listen, if we can continue to grow, this year we're going to be on track for about 3.5x growth. And if we can continue to do that year over year, we'll definitely be on track for that. But the bigger question for me was, can you empower local communities to be able to solve this problem and make it so that anyone, anywhere who has housing can think about, oh, you know what, I've got a spare bedroom, or I've got that formal dining room I never use. I might as well put it on PadSplit because I trust that this is going to be a good environment, a good situation, and I'm going to do some good while I'm also doing really well. And that's really what our vision is just thinking about anyone, anywhere using this platform and these services in the same way that, you think about what's the difference between Uber and hitchhiking, and the answer is nothing, right? The only difference is trust, and that technology creates trust so that you don't have any problem. You don't even think twice about getting in the back of the car when you call the Uber, but that's really only because that technology exists, and we want the same thing to happen for housing.
Okay. Now, how do you feel about this market with wages and inflation? You're seeing inflation is starting to kick in. We're seeing it on our latest CPI report, but we're not seeing wages get too crazy. We're seeing housing prices go up and things like that, but we're not seeing the wages probably keep up with that. How do you feel about this wages versus inflation that is kind of been dominating the headlines?
Yeah, listen, it's a huge problem, wage growth has been way too stagnant for way too long, I could wax on and on about how employers need to pay more. You want to know why restaurants and other employers can't find people to work? It's because they can't afford housing, and they can't afford their basic needs on the wages that are being offered. So something's got to give. Now, as it relates to me personally and PadSplit, at the end of the day, we don't really control a hell of a lot, and I can't change how much employers are paying all their employees across the country. What I can do is look at the cost side of that equation and make sure that anyone who's working full time has access to housing. And that's ultimately the problem that we're trying to solve, because today it's just not true. And, ask people, do the people who work and serve in your communities deserve at least the opportunity to live there? And the answer to that question, unfortunately, is no in every community in America, essentially. And we want that answer to be yes.
Okay, definitely. Definitely, I want to get your take on that. I like your opinion on that. So we talked about what was PadSplit, your thoughts on the housing market, how PadSplit works for the investors and the residential people. But before you get out of here, my last question. I got to ask you this question.
Sure.
What is Atticus investing in? What are you investing in? Where are you putting your money in?
Yeah, listen, I'm a simple man, Prince, and I go by one principle, and that's buy low, sell high. So I've been a value investor probably since the day I was born, and right now it's there's just no question that for me, at least in this affordable housing space, it is the place to be, and I've been investing here now for 13 years and continue to be there, just because I've seen the supply demand imbalance just get worse and worse. And so that's ultimately what I'm still doing today.
I got a question for you. How do you feel about the rise of these tiny homes? You know, these little tiny homes that people are kind of putting in. How do you feel about those?
I'd say any way you can increase supply, the better, right? We are not a silver bullet solution. Tiny homes are another solution. I think at some point in time, we'll probably be able to offer the same level of resident management services in tiny homes and ADUs. And that's probably only 6 to 12 months away, honestly. But yeah, the reality is like, we are just in a huge hole when it comes to housing production. And so any way that someone can increase the amount of housing, the better.
Okay. One more thing I got to ask. You spoke about the IPO. You spoke about possibly doing that. Offering PIPO shares for people like me, affordable. Is that something you would even be open to?
Yeah, I mean, look, there's a lot of different mechanisms out there today that are allowing folks to invest. We're a startup. We're always raising money, right? So I think anytime anybody is interested in participating, we're open to creating syndicates for folks and all sorts of different vehicles where people can do it. Clearly, we use a pretty wide network of investors today that are benefiting pretty heavily from the platform just through their real estate investments. But again, in terms of investing in the company, let me know.
Yeah, you got companies out there like the Start Engines and the Wheat Funders and what's the other one? Republic, I think. But they're allowing people to get pre-IPO shares, So I think that'd be a good idea for, I like to see PadSplit on there, grab some pre-IPO shares. So
we'll look into it.
Okay, definitely. Was there anything that you want to leave to our live audience and our playback audience?
Yeah, I'd say the main thing, I mean, certainly for the investment community, if you're curious at all, check out our website. Just go to padsplit.com. There's a section at the top that says for hosts. Just click in there, and actually, if you play around a little bit, you can see a calculator that'll allow you to, whatever market you happen to be in, look at what your house would earn under a traditional setting versus what it would earn as a PadSplit. And yeah, I mean, we're in 8 different markets right now. So if you're interested, please reach out, and we'd love to chat with you.
Okay. All right, ladies and gentlemen, you already know what time it is. This is the Investor Show. This is Atticus, the CEO of PadSplit. I almost said PadSplit there.
You good?
PadSplit, who is taking residential homes, people who have rental properties, and bringing in a new way to also bring in affordable housing. Definitely like that. Bringing in money for investors and also bringing in a place to live, affordable homes. So anyway, until the next video, podcast, cartoon, or whatever else crazy you see me doing around the globe, you already know. My name is Prince Dykes. Peace. Be safe. I'm out. And thank you.